I'm now joined in the studio by Lullu Krugel from PwC. Thanks so much for your time on SABC News. That decision to keep rates unchanged was pretty much expected.
Yes, that was in line with market expectations. There was a broad expectation that we won't see any change this time around.
Something that was quite unusual that came out of that is Governor Lesetja revising South Africa's growth outlook down to 1%.
Yes, that was a shocking number. We've seen the Reserve Bank in the past 3 MPC meetings actually revising growth downwards. So in March it was 1.3%. So that's quite a big change, and I think it's because we now have a better view of what has happened in the first quarter and how significant, for example, the impact of the load shedding has been. We've seen the retail numbers coming out, mining, manufacturing. So we basically know that unfortunately in the first quarter of this year the economy definitely contracted. We are almost 100% sure when those numbers come out in about 2 weeks. That's what we will see, and that seems to be what the Reserve Bank is thinking as well.
Let's go back to that interest rate decision. 3 members voted to keep it the same, 2 voted to cut.
Yes.
What does that mean?
So I think that's quite a big change. There has been some analysts that's been saying, might we see a cut this year? So the expectation was broadly for no change this year, maybe a 25 basis point increase. That's where we were in the beginning of this year. So it's a definite change in direction, and I think it's been driven by the fact that the Reserve Bank has revised the growth outlook downwards so significantly, but then of course combined with that with the inflation numbers that we've seen coming in below that midpoint. Yesterday's figures at 4.4. So as the Governor explained during the press briefing, that means that the basis from which they work is lower, and they mainly look at where inflation should be going. They expect it to peak in the first quarter of next year, and then well below the 6%, at around just over 5%. And then from there on starting to taper downwards again. So those two things I think were the big drivers to say, should we not see if we can get a bit of an injection into the economy? He
spoke about the global growth outlook and the impact that this trade war that China and the US are going to have, saying that 0.8% of growth could be lost because of those kind of tensions. And we need to bear that in mind when we're looking at how we are going to perform as South Africa.
Absolutely. If you take into account the IMF forecasted China's growth this year to be 6.2%. Now that's the lowest growth forecast that we have seen for China in almost 20 years. Now if you take 0.8 percentage points off that, their growth falls to just 5.4. And that is quite significant, given that we expected that about a quarter of the additional activity that we would see in the global economy this year would come from China. It's our biggest trade partner. Yes, we are importing more from China than what we're exporting, but they also do buy a significant chunk of our products. And if the economy is not growing, then South African products won't be exported there. And because they're the second largest economy globally, it is unfortunately going to have a ripple effect on the entire global economy.
When he was speaking, Governor Kganyago also spoke about the structural challenges that South Africa faces and saying that we can't deal with those with monetary policy alone. What did you read from that?
So typically you would expect monetary policy to impact consumption in the economy because it will drive what people repay in terms of debt. And if we think about where the challenges are in the South African economy, yes, the consumer is under pressure, but that is a short-term challenge. And lowering the interest rates would only be a short-term measure that can help the consumer a bit. But we're sitting with challenges around unemployment, around the mining sector continuously shedding jobs, construction shedding jobs, government debt growing. So those are not things that monetary policy can do anything about. It's a short-term stimulus just for consumption. So I understand why that is his view, and therefore we are seriously looking at, for example, what choices President Ramaphosa will make towards the end of this week, early next week, around the cabinet and who will be in charge of which parts of the economy.
There seems to be constant questions around the Reserve Bank. Even in the press conference, you saw him getting a little bit, I would say, touchy when the issue of politics comes in and the issue of politics unmixing with the Reserve Bank. He also said that currencies of countries with strong macroeconomic fundamentals perform better and that the politics and the Reserve Bank should be separate.
I think one of the things that analysts has always appreciated about the South African Reserve Bank is the fact that monetary policy has been very transparent. So if we look at the statements that they issue, they tell us exactly where they see things going, when they expect to make a move. And that independence from the rest of policy, is something that's, I think, counted in the favor of the Reserve Bank. So he's very firm to say that we're not going to get involved in that, and that we make our decisions based on the data and what we see in the data. So I'm sure he realizes and he understands that politics do influence what happens in the data, but at the end of the day, the Reserve Bank is guided by what happens in the inflation growth outlooks, and they don't try and influence what is happening in politics.
But let's go back to those interest rates and what a potential cut would do. We've got a climate that's now, we're hearing 1% growth, not around 1.2%, and 4.4% CPI. So if our interest rates are cut, what's going to happen?
It could be a bit of a stimulus or a breather for consumers. I am thinking that it probably won't have a massive impact, because it would probably be a small cut of around 25 basis points. So I think most people would just say, thank goodness, now it's a little bit easier to pay my debt, rather than to say, now I have extra cash to spend on other things. So, and I think that is what the Reserve Bank is also keeping in mind, and I think that's maybe why they didn't make the decision this time around to say let's cut interest rates, because I think they realized that it would have probably a limited impact on growth. It won't be a massive stimulus. So at least if we see a cut in rate rather than an increase, debt, most of us, those of us with savings, of course, wouldn't like to see that, but that's not the majority of South Africans. Most of us have debt in some form, so that would at least be a little bit of a breather for us in that regard.
You got asked questions about how the Reserve Bank makes its projections and why they've been getting some figures wrong. How did you respond to that?
That is something that again has been being brought up by analysts over the last couple of months, actually, to say that the Reserve Bank tends to be on the upper end if you look at their inflation forecast. And quite frankly, his response was, it depends on what period you look at. The particular person was referring to a 3-year period. If you look at a 10-year period, they were below just as many times as they were above. And I absolutely agree with him. I think the team they have there are probably some of the best macro forecasters. The model that they use is probably some of the best out there globally, not only, by far the best in South Africa. I don't believe there's anybody else that has models as sophisticated as the Reserve Bank. So I think we can rest assured. The people that brought up those questions must maybe just ask themselves, how often have they been right or wrong? So I'd rather also the Reserve Bank potentially err on the side of caution, maybe be a little bit high, maybe make the decision 3 months too late to cut interest rates than doing it too soon, and then we're sitting with an inflation issue in an environment we already have low growth.
He spoke about, and we've discussed this a little bit earlier on, trade tensions and external influences on particularly emerging market countries and South Africa specifically. What other issues have the potential to affect us and our economy?
So Brexit is still something that's hanging in the air for us. The US, or the UK rather, is our largest trading partner in Europe. So the longer this Brexit uncertainty plays out, it's similar to what we've seen in South Africa. If you look at business confidence over the last couple of months, with uncertainty around politics and how the election would play out, we might see a similar thing in terms of Brexit, with this protracted process basically just causing more uncertainty for businesses in the UK. And the UK also still one of the top 10 economies in the world, so that could have an impact. Globally, we've seen some emerging markets like China getting into a situation where their debt levels are growing quite fast. So that can lead to a situation where we had a couple of years ago in Europe, where we had governments that were running into debt issues.
Thanks so much for your time on SABC News. Lullu Krugel from PwC speaking to us there about that MPC statement and the decision to keep rates unchanged. It's time for a short break.